Welcome to Inside India. I'm Amitabh Singh, and these are your headlines this Tuesday. Markets continue to grapple with trade uncertainty, with reports that President Trump is weighing fresh tariffs on national security grounds after the Supreme Court setback. The president also warning countries against abandoning negotiated deals. India's IT sector could be in for a fresh bout of pressure after AI fears sent US software stocks sliding once again. And India targets raising over $19 billion from the listing of state-run companies by the end of the decade. That would see IPOs in the infrastructure and energy sectors. All right, we're watching all the trade uncertainty playing into the sentiment in Asia. And for that, we have JP Yong just giving us the latest on what's happening in the markets. JP, what's going on?
Yeah, and this Tuesday morning, Amtosh, one of the big questions, or one of the two big questions, is whether or not Asia would follow that sell-off we saw all on Wall Street that was on the back of concerns with regards to AI valuations. It seems a bit mixed, actually, to the upside, and a bit of defiance when you look at some of the major equity indices right now. If you zoom in on the wall, you'll see that there's some strong gains from likes of the Kospi, for instance, and the TAIEX once again. And we'll go deeper in that just a little bit, but we also have to highlight the other thing folks were watching out for, and that is the return of these mainland Chinese markets after that long, extended Lunar New Year holiday period. And they are gaining by about 1%, in sharp contrast to how the Hang Seng in Hong Kong is doing, down by 1.7%. You'll see here the tech shares in Hong Kong, meanwhile, did follow, it seems to have followed Wall Street's lead and are one of the biggest laggards and biggest weights on the Hong Kong benchmark today, down by 1 point, down by that much. The Hang Seng Mainland Banking Index also looking quite subdued today on the back of the PBOC keeping rates, the LPR there, loan prime rates there, unchanged, and thus also seeing that the Hong Kong is one of the laggards today. Now, zooming back into the AI trade and why it's not hitting Asia that hard, well, you'll see here that some stocks actually across, and semiconductor stocks are doing quite well. And whenever these semiconductor stocks do well, you'll see the TAIEX and the Kospi in Taipei and in Seoul do quite well. Samsung, SK Hynix still riding a wave of the fact that there is that memory chip shortage that is still boosting demand for their own memory chips. TSMC and United Micro also doing quite well. And it's also curious to see how that's impacting a lot of the tech stocks in Japan, because while we did see some headwinds, that is, the Nikkei 225 actually defied, despite the fact that some of their heavyweights, like Toyota, for instance, and SoftBank, are seeing significant losses today. You'll see here the likes, for instance, of Advantest and also the likes of, of Tokyo Electron staying in the green, but also companies like Sumitomo Electric and Murata Manufacturing, they're doing quite well. The thesis right now is that AI hardware stocks, stocks and companies that are essential to building out data centers and infrastructure needed to boost AI in Japan, will continue to see gains, and thus you're seeing some of these electronics products and also these motor makers like Murata, for instance, doing quite well and making sure they're taking the lead in terms of making sure that the Nikkei 225 is keeping its head and nose above water. Tosh.
Thanks so much for that, JP. It's asymmetrical clearly within the AI space also, and we're watching that very closely. Very nuanced. The Indian markets, they come online in about 45 minutes. GIFT Nifty futures are indicating at this point in time that it's going to be a bit of a muted start, with all three major US indices falling more than 1% after Trump's renewed threat. India's market will digest that, and the interpretation will make it interesting. Probably cautious, guarded on tariff uncertainty, and the AI disruption, remember, impacting India's IT services. That continues as a trend. It's the State of the Union tomorrow, and the Indian markets will likely open just as Trump's speech ends. India's markets did gain on Monday's close by 142 points, or about 0.5%, but GIFT Nifty at this point in time indicating a more cautious, lower start perhaps. The PSU bank sector did keep the Nifty up as the biggest gainer, and the IT sector was once again the big loser and really dragging the index down. The rupee once again in focus, the RBI governor in a press conference suggesting that volatility is the only concern. It's erased, it's erased its gains against what it got after the US-India trade deal was kind of announced, interim deal that is, those developments, but still trailing against Asian peers on the back of perhaps a subdued foreign inflows. So we'll continue to watch that as the market opens in about 45 minutes or so. The US President Donald Trump also warning countries not to back away from trade agreements in a Truth Social post overnight, saying those who, quote, play games could face higher tariffs under other legal authorities. The warning follows a Supreme Court ruling that struck down his earlier duties. In retaliation, Washington hiked the new temporary global tariff rate to 15% from 10%. These new duties are set to take effect later tonight, Asia time. And President Trump is considering new national security tariffs on several industries after the U.S. Supreme Court struck down many of his recent levies. The Wall Street Journal reported that. Now, the new measures would be issued under Section 232 of the Trade Expansion Act of 1962 and would be separate from the 15% global tariff Trump announced over the weekend. Section 232 allows the U.S. president to impose trade restrictions on imports that threaten national security. The proposed new tariffs would target sectors including large-scale batteries, iron products, industrial chemicals, and the power grid equipment. To talk about that and more, we have Jayant Dasgupta. He's the former Indian ambassador at the World Trade Organization. Thank you so much, sir, for speaking to us. We really appreciate you taking the time. I want to start by asking you that, obviously, as you heard, Trump has warned of these higher tariffs for those who play games. A former trade negotiator told me that India must renegotiate given the new circumstances. But how can India do that without inviting Trump's ire?
Well, President Trump has a mercurial temperament. It is known all over the world. And he is not beyond holding out threats at various points of time. So this is par for the course, I think. But the ground reality is that there is no way India can not negotiate, because this 18% tariff also, which was set to kick in after the interim trade agreement had been signed, there is no way that India will go back to that position. So renegotiation has to be there. Whether President Trump agrees to it today or tomorrow remains to be seen. But I think that is the situation on the ground.
There was this commentary that came initially after the Supreme Court verdict. This was again based on sources and reports, which suggested that India would maintain the spirit of the joint statement. And in that context, I want to ask you why you say that there is absolutely no way that India would be okay with this 18% tariff under these new circumstances.
Well, the spirit is one thing, but this framework agreement was not fleshed out. And that had to be done through the interim trade agreement, including the tariffs which India was to lower on industrial products and on many agricultural products which had not been exempt. So this 18% was, of course, there. If it had the Supreme Court had given a verdict saying that President Trump had the powers to do it, but now that that power has gone, it is only the Section 232 powers that he is threatening to use, as well as Section 301 of the Trade Act 1974 that he is threatened to use for unfair trade practices. Now, both of these actions would require detailed investigations, the 232 by the Commerce Secretary of the U.S. and the 301 by the USTR. And these investigations will then go through a quasi-judicial process. And the point is that they will also be subject to challenge, as is the Section 122 tariffs that he has put in of 15% effective from today midnight. That is also subject to challenge because that is available to the U.S. president only in the face of a balance of payments crisis. What the U.S. has been facing for the past at least 3 decades is a trade deficit, not a balance of payments deficit. So, and Neil Katyal, the lawyer who was prosecuting this case before the Supreme Court, has said that the Department of Justice of the U.S. had stated in the IEEPA case that this was not valid. The Section 122 conditions had not been satisfied in enabling the president to use that provision instead of IEEPA. So it is, again, the Section 122 action that President Trump has taken is also subject to challenge.
Right, a lot to unpack there, but I just want to make it a little simple for our viewers. So we'll break it down. As things stand, I want to ask you very simply, what aspects of this trade relationship between India and the US should Indian negotiators try to, well, I don't want to use the word play games with, but renegotiate?
The first one is, of course, in the trade framework agreement itself, there is a provision that if one side changes the duty structure, the other side would be free to renegotiate. Words to that effect. So this is what has kicked in now, because President Trump is no longer empowered to have 18% tariffs. That is one thing. The second point is that suppose President Trump goes ahead and slaps a lot of duties under Section 232. And subsequently, let's say in 4 months, 6 months, those also are found to be ultra vires, the US Constitution. That is, they have to be taken off. Then the Indian side should have the right to roll back its tariff concessions also, which had been given on the condition that these US tariffs would remain in place. So these are some of the things. And of course, President Trump has already, I think, climbed down on this claim that India would import $500 billion worth of goods in 5 years. It had committed. That is what the first fact sheet coming out of the White House had said regarding the Indian trade agreement. But in the second fact sheet, President Trump's office gave out that India had only intended to buy $500 billion worth of goods. So there is give and take going on. And President Trump has also been softening his stand on many issues.
Yeah, we did actually report that when that change happened in the fact sheet. I guess it's difficult for anyone to narrow the aspects of the trade deal that can be renegotiated, and I understand that. As things stand, one of the calculations that are perhaps difficult to make is who has the advantage, India or Asian peers, as things stand? Because there was one report from Money Control in India quoting a source saying that sectors which India can get more concessions or exemptions via the trade deal is being assessed now because the 18% tariff rate gave India a slight edge over peers. But that's no longer there. It's 15% for everyone.
That's true. India, if you look at the broad picture, 45% of India's products by value are not subject to tariffs. Only 55% or so are subject to tariffs. And in these 55% products, there are a lot of these labor-intensive products like textiles and clothing, leather, gems and jewelry, shrimp, etc. So these are the areas in which a very large number of people are engaged, directly as well as indirectly. And these would, of course, figure at the top of the list of Indian demands of concessions, so that it, if not on a par, it should be, slightly better off than its competitors. So that is something which the Indian negotiators would definitely strive to have.
I do want to ask you, given the upcoming midterms and this 150 days based on the Section 122 before Trump needs congressional approval, and we could also see, as you suggested, potential legal challenges to come within those 5 months, those 150 days. Does that give India greater leverage in negotiating by playing, let's say, the waiting game?
Well, in a sense, India's leverage has increased. That is indisputably so. And that of other countries also, which are willing to take the dare and renegotiate and say so. That, I think, is true for all countries. But, and if you look at large countries like the European Union, for instance, they have also put on hold ratification of the trade deal, which means that they are also looking at possibilities of renegotiation. And I'm sure the ASEAN countries, those who have already signed a deal, would also look at renegotiations. So President Trump is aware of that, and that is why these threats are coming out, that countries which have already signed a deal or entered into a trade deal can't back out. So the leverage has increased, and to what extent it actually gets translated into better conditions or concessions from the U.S., that remains to be seen.
There are a number of theories of what's going to happen, permutations, combinations. One of them is, could Trump simply reintroduce the 150-day emergency tool by effectively extending it for multiple periods? I don't know what your take is on that.
Well, if he does that, it is only for 15%. That is one thing. And two, it is already, I think, there is a case building up of challenging it before the U.S. judicial system. So whether it goes to the Court of International Trade and then to the Federal Circuit Court of Appeals and then to the Supreme Court, that remains to be seen, or whether it can be raised straight away before the Supreme Court. So if that can be done, that is a legal issue which only U.S. lawyers can, dwell upon, then this 5-month period itself will get compressed. And I'm sure the U.S. Congress would not like transgression of their area or their jurisdiction and allow a president to impose, after, let's say, a one-day break, reimpose tariffs of 15% for another 150 days, because that would be, I think, violating the spirit of the law, Section 122. And no legislature would like that to happen. That is one thing. The second point, as you mentioned in passing about the midterm poll, I think there is considerable apprehension in the minds of certain voters in the Republican Party itself that President Trump's actions alienating a large part of their support base. And this may reflect adversely in the midterm polls in November this year. So they would also be, conveying this message to the president that he has to restrain himself and remain within the bounds of the law and not try to stretch it as he would like very much to do.
And we still have to, try to understand what Indian businesses will do, because I spoke to a particular trader, a business owner, and he basically was asking me, I don't know whether I should go ahead and ask for refunds, and even if I should, how should I do it? That's one of the questions that is on their mind. But Jayant Dasgupta, sir, the former Indian ambassador to the World Trade Organization, thank you so much for joining CNBC. We really appreciate that. All right, let's take a quick check on what's happening with Bitcoin. Remember, it's been a volatile time for Bitcoin, as it usually is, but perhaps a little more this time around. 5.5% down, 63,700. The support base was thought to be around 62,000, maybe 65,000 in the last couple of days. And there have been enough speculation ongoing in predictive markets, particularly those prediction markets suggesting that Bitcoin could fall even further. And at this point in time, it's hit 63,000. We're going to have to wait and see what this means. Clearly, there is a safe haven trade, which is leaning towards gold and silver and these precious metals and not going towards Bitcoin, which is obviously something that was happening initially in the last couple of years. We're also looking ahead to the 2026 State of the Union address. U.S. President Trump is expected to celebrate his administration's perceived victories to the joint session of Congress after a highly eventful first year back in office, the immigration crackdown by ICE, the U.S. foreign policy shifts, and of course, the latest trade developments. They're all expected to feature highly in his speech, and we'll bring you all of that live tomorrow, Asia time, inside India. We'll be back in 2 with lots more. Welcome back. This is Inside India. Now, China's AI companies are under fire this morning after Anthropic accused some Chinese firms of using Claude to train its own data. Well, this was speculated for a while. There was a lot of questions around this, and our China reporter, Elaine Yu, has the details. Elaine, what's going on?
Hey, lots of questions indeed. Anthropic, the creator of Claude, has accused three major Chinese companies, DeepSeek, Moonshot, and Minimax, of a, quote, industrial-scale campaign to siphon off IP to improve their own models. Anthropic claims that these labs together used more than or around 24,000 fraudulent accounts to generate 16 million exchanges with its AI, violating its terms of service and also violating its regional access restrictions as Claude is blocked in China. Anthropic said that they use the technique called distillation, which is basically a shortcut where AI models train themselves using the output of stronger, often frontier AI models. And Anthropic acknowledged that distillation is widely used for purposes like distilling its own models to create smaller and cheaper versions, but the company said it can also be used illicitly. For example, acquiring powerful capabilities from other labs in a fraction of the time and at a fraction of the cost, which is what Anthropic is accusing these Chinese companies on. Some of these details are quite a bit of a bombshell here. Anthropic said Minimax, when Anthropic released its new model, Minimax redirected nearly half of its traffic to capture their capabilities. And it also said that DeepSeek was specifically trying to extract Claude's, quote, internal reasoning, asking the AI basically to explain its step-by-step thoughts, presumably to copy its logic. And it's not just accusations on the software front, on the hardware front. A Reuters report citing a Trump administration official alleges that DeepSeek also trained its AI model using NVIDIA's most advanced Blackwell chips, which are blocked in China. So we're seeing a lot of noise around DeepSeek now coming from the U.S., especially as the Chinese LLM is expected to release a powerful new model in the coming days or any time now. Amitosh?
Yeah, Elaine, all of this is something that was questioned when the DeepSeek moment really happened. But I guess right now what we need to understand is how the markets are reacting in China. Mainland markets returning with action on the first day of trade after the Lunar New Year, something we were all waiting for. So what's it like? What's it looking like?
Yeah, so as we can see, green across the board trending up here, and the timing could be because of the SCOTUS ruling on Trump's tariffs that they are unconstitutional. And also with the AI names, very interesting to see Minimax up 7% and Jipu AI also up, surging even more, around 16%. So investors are favoring these Chinese AI names despite geopolitical tensions and also despite these accusations coming from Anthropic. And meanwhile, China's chip stocks are down a bit despite Beijing's self-reliance drive. So a lot for the markets to absorb after coming online a week from the Lunar New Year break. Amitosh?
Perhaps the market's assuming that China now has more leverage in talks with Donald Trump. Thanks so much for that. Now, meantime, Japanese markets are getting their first chance to react to all the tariff news flow over the weekend. Our East Asia reporter, Lisa Kim, is right here with us and has the latest.
Hey, Mataj, that's right. So Japanese markets are catching up on two developments. First off, they're reacting to the SCOTUS decision that came out over the last Friday that Trump's reciprocal tariffs were unconstitutional. They're also preparing, perhaps, to react to latest news out of China. Its Commerce Ministry has announced in the past hour or so that 20 Japanese companies, including Subaru and Mitsubishi Heavy, have been added to its export control list, saying that they were unable to confirm the end users. But when it comes to Japanese stocks, it's pretty much a mixed picture across the board. When it comes to the Nikkei 225, it's seeing very modest gains of less than 1%, with AI infrastructure stocks leading gains gains in that area. Yoshita Kasuda, who's a quant strategist at Nomura Securities based out of Singapore, told me that Japan has a lot of AI hardware names that could still benefit from this demand for data centers. And when it comes to the yen, it's trading in the 154 handle to the dollar, slightly stronger than they were on Friday, and this due to renewed uncertainty over U.S. tariffs, bringing some of that safe haven demand for the Japanese currency. Also, investors are keeping tabs on who Prime Minister Takaichi might appoint to the new board, and BOJ's new board is expected to be announced sometime soon, and investors will take clues about her policy direction from who she appoints to fill up those 2 vacant seats. Amataj?
All right. Well, we wait on those decisions. We'll be waiting for that for quite some time. Really appreciate you joining us. We're going to take a short break. We'll be back in 2. We're keeping one close eye on tariffs and another on oil because U.S.-Iran tensions have been in focus for quite some time. You're looking at both Brent and WTI crude up about, well, nearly 1%, and we'll keep watching that space very closely. A third round of nuclear talks are between the U.S. and Iran later this week. U.S. Special Envoy to the Middle East, Steve Witkoff, and Jared Kushner will meet with an Iranian delegation on Thursday in Geneva. Ahead of that, Trump warning Tehran that it will have a, quote, very bad day if it doesn't make a deal with Washington, and oil prices hovering near a 7-month high. We're also learning that the U.S. oil may actually retest the support of 66 or so, 66.16 per barrel, a break below which may trigger a fall to 65.23 at this point in time, 66.88 as it's continuing to move. Now, U.S. natural gas futures, we're keeping an eye on that too because gas prices fell to a 4-month low on Monday due to milder weather. At this point in time, up about 0.5%. Forecasts over the next 2 weeks, even as a massive blizzard swept across the U.S. northeast region, and the powerful winter storm has brought air travel to a near halt at major airports serving New York City, Boston, and Philadelphia. Air India also cancelling all flights to and from New York and Newark. Our travel and transport reporter Monica Petrelli joins us with more. Monica, I used to love this time of the year in New York, but this is going out of hand.
Yeah, well, as they say in New York, December is great, but then after Christmas is over, you have January and February to deal with. But yeah, what we're seeing is transportation really coming to a standstill in the Northeast, and that is because now we see more than 20 cities saying that they've received more than 2 feet of snow, even almost 3 feet in Providence, Rhode Island. More than 7,000 flights have been canceled as a result. No airport hit harder than LaGuardia. 98% of flights there canceled yesterday. We also have around 500,000 homes and businesses that don't have power. So this is why we're seeing, like New York Mayor Zohan Mandami telling people to stay at home. He basically has a ban in place saying do not travel if you don't need to. And he even said stop ordering takeout, stop putting these delivery people out in these conditions. But now some positive news. We're seeing that ban being lifted, and that's as the storm is moving off the East Coast. The cancellations, though, not out of the woods. These are set to continue. Yesterday, around 19% of all flights in the U.S. were canceled. That's going to be projected to be about 7% on any given day. It's supposed to be about 1%. So we'll still see aviation having to deal with this through today. Hopefully by tomorrow, things will be back on track. But really, this storm coinciding with another storm over the weekend, this one amongst passengers. And this was after the Trump administration announced that both pre-check and global entry would be suspended. Now, the Sunday that was set to start, within 4 hours, reversal. We saw pre-check back on board, but that global entry, and both of these are programs that passengers pay for. You apply and you pay in order to get an expedited travel lane. Global entry is available to U.S. citizens, but also to countries around the world, about 20 or so, just including Singapore as well as India. So if you are traveling to the U.S., know that you might have to check your flight first, but also then stand in line a little longer if you are a part of that global entry program.
All right, Monica. I've been getting pictures of friends from within their apartments showcasing that they can't move out, and the snow is just nonstop. Thanks so much for that. And now back to India. Prime Minister Modi is heading to Israel tomorrow. This will be his first visit to the country in 9 years. During Modi's visit, the two sides are expected to sign an updated security agreement and talk AI cooperation. But it will be a very quick turnaround for the Indian Prime Minister, as he will gear up to receive his Canadian counterpart the following day. Canada's Prime Minister Mark Carney is expected to be in Mumbai first. That's on Thursday, where he'll meet Modi and Indian business leaders. Carney will embark on a 3-nation trip aiming to strengthen partnerships in energy, technology, AI, and critical minerals. We are, of course, counting down to the market open in India. At this point in time, it's looking like a cautious open with 10 minutes or so to go at 25,609. Remember, Nifty closing at 25,713. A lot for Nifty to digest with the trade uncertainty, the tariff uncertainty, and of course, the rupee. At this point in time, weakening against, strengthening against the dollar, but has been weakening against it for quite some time. And even the RBI governor making a few comments that it's less to do, that interventions, if at all, coming from the central bank are not so much to do with trying to strengthen the rupee or a particular number that they have in mind. It's really all about making sure that there is less speculation happening effectively. Now, we'll continue to, of course, track everything that's happening in the markets, but IDFC First Bank has been in focus because there's been something that's happened with them, and that's why the stock is, something we're watching. It's down 16%, dropped as much as 20% in Monday's trading session after the private lender disclosed suspected fraud worth about $65 million. The Mumbai-based bank said the discrepancies were limited to government-linked accounts at a branch in the north of India, Chandigarh, and that the Reserve Bank of India has been informed. Governor of the bank, Sanjay Malhotra, said there is no systemic issue with the bank and that IDFC First has suspended 4 employees and appointed KPMG to conduct an independent forensic review. But this is something that's really making headlines in India. We're also watching how India is targeting raising $20 billion from IPOs of state-run firms by 2030. This in a report released by the government's think tank, that's the Niti Aayog. The listings form a part of a broader asset monetization push aimed at raising nearly $184 billion over the next 4 years. This was kind of made clear during the budget on Feb 1st. The IPOs spans key sectors, including railways, power, petroleum, gas, aviation, and coal. The plan includes potential listings of 7 railway companies, power sector subsidiaries, as well as units linked to Coal India and Renewable Energy Asset of India, which is NLC India. Officials also expect a potential $300 million listing of GAIL Gas, a subsidiary of GAIL, by 2028. Also, India's finance minister, Nirmala Sitharaman, and its central bank governor, Sanjay Malhotra, they addressed the media after the customary post-budget meeting of the Central Board of Directors of the Reserve Bank. And there were a couple of takeaways. The press conference, which lasted nearly an hour, touched upon several topical concerns facing the Indian economy and the market. First, she felt it was too early to comment about the SCOTUS verdict and its implications for India, suggesting that the negotiators in the Commerce Ministry will have to recalibrate and decide when to travel to the US to continue the talks once they've assessed the verdict. Second, she stressed on the lack of foreign fund inflows or their tepid inflows recently as a concern that is beyond economic and commercial aspects. She suggested it's possibly because of geopolitics, so nothing that she can really do, and that they would have to really go ahead and try to understand what the real reason is. Third, the RBI governor reiterating that the central bank remains committed to providing liquidity for the economy and that the intervention to support the rupee, if any, is to reduce volatility, which I kind of mentioned earlier. He also stated that the trade deals firmed up by the government will help the current account going forward. Listen in.
The government has now a number of agreements for trade, international trade, that it has signed, so that will help our current account even further going forward. Even on the capital side, it will help because trade and investments generally go together.
Kishore Narne is the Director, Head of Commodities at Motilal Oswal Financial Services and joins us for more on this. Kishore, thanks so much for making the time. I want to start by asking you about the tariffs and the renewed uncertainty because of them. Is the market reading this 15% figure as a net competitive advantage against Asian peers or really a renewed uncertainty?
I think market is reading it as at least giving us the same fighting ground. I think especially some of the industries like gems and jewelry, where we had a significant disadvantage when the higher tariffs were there. Now, at least if it is a global tariff, that everyone is playing on the same field. So I think that's one good thing out of this. But the overall feeling in the entire market is that it opens up the uncertainty again. The markets are not able to take it, saying that the Trump administration will keep calm. So that opens up doors for renewed uncertainty, actually, rather than settling down the nerves.
My God, we've been waiting for that settling down of the nerves. Now, Nifty IT was the biggest loser yesterday, as it has been for some days, actually. PSU banks, the gainers, the biggest ones. But who wins in this renewed uncertainty and who loses? I know you mentioned gems and jewelry, but give us more color on that. And also, what's the portfolio strategy in this uncertainty?
I think some of the large industries, the pharma and even IT and IT-enabled services have found some of the alternative markets to US, actually. So they diversified over the last 12, 18 months. And I think those are much more resilient as far as tariffs impact are concerned. The MSMEs and the smaller companies are where the significant pain will be there. And if the US demand remains subdued, then that will be another blow. So the issue is that whether if overall aggregate tariff is lower, and if that revives US demand, that will cushion up some of the shock. But otherwise, the biggest pain is in the MSME sector.
All right. The general trend of foreign fund outflows, they may have paused in Feb, but the finance minister stating that there's every reason funds should flow to India and that they would have to see what's holding them back. It's not commercial or economical, maybe geopolitical, she said. What's your take on this?
See, I think January has been especially a big outflow month. Roughly close to around $4 billion we've seen FPI sell-off in the stock market itself. February relatively has been positive with a little bit of turnaround with the possibility of a deal. But I think overall that's been a concern area, and inflation coming close to around 4% expected to be in the first quarter 27. So I think we are seeing that probably the central bank might hold on to the rates, might have a slightly more hawkish approach, and will continue to be focusing on stabilizing rupee rather than lowering the rates at this point of time.
even if that's not what they claim. The RBI governor making it very clear that it's not about stabilizing the rupee. It's about managing speculation. The RBI governor also said that the number of trade agreements that India has kind of got through will help the current account going forward. Implementation and transmission is likely to be uncertain and asymmetrical. You've got EU implementation in 2027 and perhaps 2028 early, and the US, as we just already discussed, we don't know what's going to happen with that. What's your take on this?
So I think transmission is a bigger concern for some time now, actually. And despite all the rates, we still see the GSEC at around 6.7, 6.78, close to more than a year high. And with the borrowing calendar coming up and scheduled for close to around 17 and $17.2 trillion for the next year, I think the yields are going to be slightly higher. And even the corporate bond market actually has been slightly higher. So I think that's where the entire rate cycle is going to halt, and probably the spreads should be widening with the Western markets. But I think the entire fund flow might not revive till around May. Maybe I think the July cliff is what I think once this 150 days is done. So what's going to happen for the US tariffs actually is going to play a significant role on the minds of entrepreneurs and the companies. And that's where the capex cycle is going to be impacted. So at this point of time, I think most of the people will be holding on, and the only sector where the capex is going on is either power or data centers and the big tech. Actually, that's where I think a lot of people are trying to raise money through the bond markets.
Okay, let's dive into that, both the rupee and the bond market. First, the rupee. Is RBI's strategy of managing rupee volatility through NDFs sustainable, according to you?
Yes, I think we're sitting on $700+ billion of reserves. So I think they have enough cushion, they have enough firepower to defend it in case something goes wrong. But again, they don't really defend a level. They defend the volatility. Actually, they don't like rupee moving so fast in a short span of time. So that's what disturbs the things. But they have not really defended a big level for quite some time. Actually, they have let it depreciate quite smoothly, apart from a couple of months in the last quarter. But otherwise, I think they have enough firepower to keep the volatility down. But as far as bond markets are concerned, I think as I'm expecting rates to be hold, so there's no point of it's more an accrual market rather than a duration market. So probably there are no capital gains possibility, but it's more that you should be holding on to that.
All right. Where do you see the rupee going? Because it sounds like you're suggesting that the depreciation of the rupee is inevitable, given the mix of how RBI is managing rupee volatility and soft foreign fund flows. And I'll come to bonds in just a bit.
Yeah, I think slowly rupee should crawl to close to around 92. That's what we have been expecting for quite some time. Maybe by the end of first quarter FY27 or maybe second quarter, we should be somewhere close to 92. But if there is any development as far as tariffs are concerned, and if there is any certainty there, especially with the trade deal going on right now, this is on hold, and the talks are going to be resuming after some clarity emerges. So that could turn around the sentiment. The best case scenario, if everything falls in place for India, probably 88 is on the cards, but that's a slightly longer shot. But 92 is a much more likely scenario.
For our viewers, let's just bring up the 10-year benchmark. The yield curve in India has been steepening, and it did rise the 10-year on Friday to about 6.7214, more than 4 basis points. Its biggest jump in 2 weeks. It's back now to about, well, 6.70. Earlier it was 6.71 and change. But what are the factors you're watching to kind of monitor this steepening? Where will the concern, elevate? What are the risks?
So the first thing is the borrowing calendar. We will be watching it closely, whether it'll be front loaded or whether the government would like to keep it slightly ahead on the into the second half of the next year. So how it's going to pan out, number one, and it's a big 18% jump over year on year. So that's going to be a drag on the bond market. Again, and then FPI limits on the domestic bond market is also something which we'll be watching. But having said that, actually, if there is any positive development as far as and revival of the demand in the Western world, probably that will give you some respite toward the first quarter of 27, as some of the IT companies and some of the big tech might actually get some capital inflows from the West, as whatever the trade deals and whatever the businesses which have been promising, some of the investments could turn around by second quarter of 27. So that could see some inflows, but I don't think there is a big question there.
Yeah, it's quite uncertain whether that turnaround will happen in the middle of 2027 FI. Gold, it's up nearly 2% to a 3-week high. Silver up 1.2%, marking a 2-week high. The safe haven demand now a double whammy, according to you. Not just trade and tariff uncertainty. You also have US-Iran tensions. Where do you see this going?
So coming to that, actually, one of the concern factor right now is not even trade deficit, not even the rupee flows. I think the Iran is a big hanging on to the commodity markets, and there is roughly around $9 to $10 premium, which is now currently built into the crude prices. I think that's also a drag, because as we are trying to enter into a deal with US, we also have sacrificed the cheaper oil from Russia. That is actually a drag on our current account deficit also. So that's also one of the negative for rupee. But as far as gold is concerned, yes, structurally the trend remains positive. There is absolutely no change in the de-dollarization policies of the global the entire phenomena across the world. I think that will continue to be there. The central banks continue to accumulate 1,000 tons plus every year. So that's going to be an anchor for gold. The short-term volatility we have seen already in January, I don't think that will be repeated. And the value buyers are coming back. The long-term investors are coming back. What we are seeing in the last couple of weeks, and the opening up of this U.S. uncertainty again actually pushed back some of the investors back into gold. So I think medium term we are looking at around $6,200. That's around 12 months or so. And beyond that, that could be around 7,000, 7,500 if you're looking at 24 months plus.
Right. Very quickly, India's renewed push to monetize government assets, the National Monetization Pipeline 2.0, it was launched yesterday. They want to raise that to 19.7 billion from IPOs or state-run firms by 2030. Big ambitions. This is part of what was revealed in part during the budget. So the push is a broader push now to raise, it's part of the broader push of 180 plus billion over the next 4 years. But do you see this addressing concerns around fiscal pressures?
Not in the immediate term. Of course, I think it's been attempted multiple times, but it has not generated the kind of fiscal support it should have. And there's a rising voice that this is one instrument the government is not being able to use it very judiciously. The ambitions are very high, but I think they will take time. Markets should support at the same time. So I see the flows from this coming towards third quarter or maybe fourth quarter of 27 rather than immediately.
All right, Kishore Nanne from Motilal Oswal Financial Services giving us that perspective. Thanks so much. Really appreciate it. Now, Indian markets have joined the trading day. We'll look at some movers in Mumbai after a very short break. We're back in 2. Welcome back. Indian markets have come online and it's looking like, a cautious or negative start, 0.6% down. We've been waiting to see whether the renewed uncertainty after Trump's renewed threat will play into the sentiment, and it's already showcasing that. Remember on Monday, when you had the new development of the SCOTUS judgment, at that point in time, the markets in the first hour in India had actually shot up quite a lot. Gift Nifty futures had indicated over the weekend that it would be a 400-point jump. But at this point in time, because of a renewed threat that don't play games, according to Trump, that's perhaps playing into the sentiment immediately. We'll have to wait and see how this plays out through the day. The rupee is something we're watching strengthening just a little bit at this point in time against the dollar. It's a 91 mark that we're watching very closely. Let's look at also how the Indian IT stocks are opening, tracking a sell-off in AI names on the Wall Street. Take a look at that. It was the biggest loser on amongst sectors on Monday, and at this point in time, it's looking like it's going to be another day where Nifty IT and even the mid Nifty IT was impacted, perhaps more than the general broader Nifty IT. At this point in time, you're looking at HCL Tech, which is down 2.83%, and the biggest loser is Persistent. It has been for some time now. Brokerage, Jefferies downgrading multiple stocks in the sector and cutting its earnings estimates by 1 to 4% across the firms. Jefferies warns that the AI pain is not over for these companies. Quick check also on how shares of IDFC First Bank are opening today. This after the private lender reported a fraud of about $65 million at one of its branches in northern India. The fraud mostly involved government-linked accounts of the state of Haryana. Again, in the north, IDFC First has suspended 4 employees and appointed KPMG to conduct an independent forensic review. And reports say events like these could prompt state governments to pull out from private lenders and look towards the state-run banks. Checking in on how some of the public lenders in India are looking like today. At this point in time, it's the Bank of Baroda that's the biggest loser at 1.5%. But in general, the PSU sector has been the biggest gainer. In fact, yesterday it was. Checking in also on shares of Bharti Airtel, the telco giant, saying it's about $2.2 billion into its financial services arm over the next few years as it ramps up its push into digital lending. The capital will go into subsidiary Airtel Money, which recently received a non-banking financial company license from India's central bank. Airtel will fund 70% of the investment, with promoter Bharti Enterprises contributing the rest. The move comes amid rising competition in India's non-bank lending space and marks a deeper diversification beyond telecom into financial services. The stock right now down 2%. IT services firm LT Mindtree has secured a $100 million 7-year contract with a Europe-based medical technology firm that provides hearing solutions. LTI Mindtree, the Indian IT company, did not disclose the client's name, but said it will develop and support the firm's key hearing and hearing aid brands, wearable devices, and also a companion mobile app. In January, the company recorded quarterly order bookings of nearly $1.7 billion. So those are the big ones that we're watching. It's down 2.5%. But for the moment, that's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next. We'll be back right during or after the State of the Union, which is going to be quite something. We'll watch that very closely. Thanks so much for joining us.